Hey everyone, welcome back to the channel. Before we get started, I want to thank our guests for joining us today. Really appreciate you being here. And to everyone watching, if you enjoy learning about investing and building long-term wealth, make sure you subscribe so you don't miss future breakdowns. Alright, today we're counting down the top 10 assets to consider owning as we move toward 2026. The big theme this cycle is balance, not just chasing growth, but combining growth, income, and protection. Let's start at number 10. Number 10, alternative assets. One of the most underrated investments is actually investing in yourself. That can mean building a business, learning a high-income skill, or creating digital products and additional income streams. Unlike market investments, this is something you directly control, and in many cases it produces the highest return over time. Number 9, high-yield savings accounts and CDs. Not exciting, but extremely important. These provide safety, liquidity, and guaranteed returns. Having accessible cash prevents you from selling investments during downturns and gives you flexibility when opportunities appear. Number 8, precious metals like gold. Gold acts as financial insurance. When inflation rises or uncertainty hits the economy, gold tends to stabilize portfolios. It won't outperform growth assets during bull markets, but it protects wealth during unstable periods. Number 7, small cap stocks. These are smaller companies with higher growth potential. They're more volatile, but historically they outperform during economic expansions. Think of them as the acceleration engine of a portfolio. Number 6, Bitcoin ETFs. Crypto has become institutional, and Bitcoin ETFs allow exposure without dealing with wallets or exchanges. It's high risk and high reward, but it also adds diversification because it doesn't always move with traditional markets. Number 5, bonds, both government and corporate. Bonds provide predictable income and help reduce volatility. They won't make you rich overnight, but they help protect capital and stabilize a portfolio when stocks get turbulent. Number 4, dividend stocks and funds. These pay you consistently just for holding them instead of relying only on price growth. You receive income that compounds over time. Many experienced investors prioritize dividends because they create steady cash flow, regardless of market direction. Number 3, real estate investment trusts or REITs. This gives you exposure to real estate, apartments, warehouses, hospitals, and even data centers. Without owning property directly, they typically pay dividends and behave differently than stocks, which helps diversify risk. Number 2, AI and technology stocks. Artificial intelligence, cybersecurity, and automation are becoming economic infrastructure. Companies powering chips, software, and data centers are expected to drive growth over the next decade. This is the main growth engine of a modern portfolio, but it works best when balanced with stable assets. And finally, number 1, S&P 500 index funds and ETFs. This is the foundation. With one investment, you own 500 of the largest companies in the US economy. Instead of guessing winners, you invest in the entire market. Historically, this has been one of the most reliable long-term wealth-building strategies ever created. So, heading into 2026, the goal isn't predicting one perfect asset. It's combining growth, stability, and income into a portfolio that can survive any market cycle. If you receive value from this video, please like and subscribe so we can continue making more content like this and educating our viewers. Thanks again to our guests for joining us, and thanks to all of you for watching. We'll see you in the next video.